Bitcoin, actually, I'm more bearish long-term utilizability of Bitcoin. I think it's a Trojan on-ramp to the CBD system.
But it doesn't mean that the government can confiscate whatever you have on your self-custody wallet. You just don't share your private key and no one should be able to touch it.
It doesn't mean Bitcoin doesn't have a role. And it doesn't mean Bitcoin can't go to 1 million. I honestly am not saying that. But I'm just saying we have to step back and ask these questions. How do you ignore the elephant in the room that the central banks, love them or hate them, and I don't love them, are stacking gold?
But there's also an actual need for having this store of value where it's already being used. Those are the countries with the high inflation, low trust in government, where they really have a need to sort of escape what's happening locally.
You have the blockchain technology, things where you can take out the middleman in the financial sector and in many places. You can trust places and trade with people that we may not have traded with before. That, I think, has a tremendous worth. That will be the next layer of the internet.
Well, welcome to the second session of the Future of Finance English edition. I'm joined by 4 gentlemen here today, which I'll introduce in a bit. But before I go any further, I would like to remind you that you are able to win 5 times 1 gram of gold if you comment the word gold, G-O-L-D, in the comment section. And if obviously you have a GoldRepublic account or OKX account, you'll be able to win 1 gram of gold. So today I'm joined by Matthew Piepenburg on my right, Henrik Zeberg, on my right as well, on my left, Roy van Krimpen, I hope I pronounced it correctly, and Francis Hunt. I think from all the 4 people here, we've already had a round of introduction actually in the last session. So maybe Roy, you want to say a few things about yourself. You're working at OKX, but maybe you also want to give a bit of background.
Yeah, sure. Working at OKX for about 1.5 years now as the regional lead for Western Europe and the Mediterranean, making sure that we can offer our products well localized for those markets in compliance with the local regulation, which is probably the hottest topic in crypto in the EU right now. Before that, have been working in similar roles in crypto for a few years already, and started out even during university as a retail trader and investor. So yeah, heavily into the crypto space. Yeah,
it's great to have you here. Today we're actually going to talk a lot about obviously Bitcoin, crypto, the markets, gold, what kind of assets we can have our own to actually hedge about, kind of like what we were talking about also earlier on. A slow crumbling, a collapse of the actual monetary system, right? And one of the questions that we asked ourselves yesterday was, okay, which currencies will prevail? In which assets can we actually hedge ourselves? Where can we protect ourselves? But first of all, we also need to understand the markets. And I think at the moment, a lot of things are happening. So maybe actually it would be good to start with this and see, okay, what is going on at the moment? Henrik, do you have like any few things you want to share? We discussed them already last night at the dinner table, but can you give us a bit of like your measurement of the temperature in the market at the moment?
Yeah, sure. So I think we have a lot of bearishness right now in the market. We have, the general conviction seems to be that we have a top in the market. We have a top in Bitcoin. We have a top in Nasdaq. Potentially, we see a lot of the Mac 7s have put in some, nasty reversal. We've seen Nvidia, and then we have Nvidia come out with great, earnings report yesterday. But it seems like people have been very, very bearish about the situation right now, and I just don't share it at this point. And I'm actually happy to see that we get this kind of sentiment, because we need this sentiment to fuel the last rally that I see we should get. I've been speaking of this blow-off top, which based on my models and my projections there, we should see that beginning really soon in the stock market, leading. So we'll see the stock market actually lead this, and then we'll see it be catching on in the crypto market. And I think we're going to get a rally to put some numbers on it, maybe 6,500 in S&P, 7,000 I could even see. I think there is a good chance to see that in a crazy blow-off top. Big market tops do not come with a whimper. They don't end out with that. They will come with a rally where everybody will be, euphoric, and I see the same for Bitcoin. We get a strong rally from around these levels here. I think we're just touching the 200 daily moving average at this point, and I think it could be a good starting point for a strong move up. My target has been for a very long time, since 22 actually, around 123, 25 on Bitcoin, and then I think we're going to see a top. And the alts will now start to catch up. I think the alt season is about to set off as well, because I think that we're going to see a dollar declining. But this is going to be the final move, the final rally. It's going to pull everybody in, and it's going to be the final one, because then we're going to end up in the world we talked about yesterday, where things are starting to unravel.
Anything to add, gentlemen? Francis, what's your view on that?
Yes, so I watch the debt markets because as we've discussed, debt markets are foundational to the system. The US 10-year yield is pulling back. That means there's a little bit of money creeping into the support of the debt markets. Yesterday when we spoke of there's a disproportionate short position, especially once Druckenmiller, Tudor Jones announced their position. We've seen the most popular instrument, TLT, representing a long-term debt, being probably the most over-shorted. So that tends to play a little bit into what Henrik is saying. There's maybe a little bit of too much, it's imminent moment. That makes me a little bit more moderate about whether it's right away that we see a sell-off. So debt markets are a concern, and that's a risk-off vibe. Typically that's associated, funny enough, with dollar strength, not dollar weakness. But I don't think it necessarily is something that's very long term. So normally if you get a bit of money flowing back into the bond market, it's offshore money will go into a dollar and buy the debt instrument. So the dollar gets a bit of a bid. We've had the dollar correct against the euro, but it's kind of technically in what we call a falling wedge. So you could get a little bounce of the dollar strength, but then more weakness. More longer term, we were discussing about tariffs yesterday, and I feel that it's inflationary, and more importantly, Donald Trump wants to reshore manufacturing. So on a bigger time frame, that points to wanting to weaken the dollar. So there's a little, we're talking cross time frame here. The immediacy of the last few days is a little bit risk-off vibes. Longer term, which tends to bid the dollar, which is why maybe Bitcoin will be feeling a bit soft, as you've seen, and the alt. But longer term, I think he's going to need to soften the dollar. And that's the other way you deflate the debt. Everybody runs to short the debt, and then the debt stays at the same valuation, but the currency gets killed. There's two taps on this geyser that's overheating and needs to explode, and they release valves of some of the pressure. At the end of the day, it's being overly heated, it's going to blow, but you can try and delay it. And one is the currency devaluation, and one is the actual valuation of the debt devaluation. Small comment on the crypto. We're a big, also concur with Henrik on the future alt strength coming. So we invert the Bitcoin dominance chart and we look at it. You had a major hammering out, if you're looking at it the normal way out, and an exhaustive push up. So generally, if you were going to have a major risk-off vibe, the Bitcoin dominance climbs. It doesn't spill because the beta on Bitcoin is less than the smaller tokens. So it feels precarious now for Bitcoin and crypto, but it doesn't feel like a longer term situation. Because we feel also a little bit that there's got to be a point where the alts start coming. But maybe we get one more, a real little splutter. Sometimes before you get a major move technically, you get a capitulation, a little bit of a kind of like the yen carry trade of August. So those are my quick thoughts on where we are now and a bit of time frame.
So overall, when we look at the markets, it would be like a temporary drawdown that we see momentarily, but from the actual structure, we're still in a bullish environment, or how do you see that?
Yes, and I'd agree with that. And I'd also say if you look at the news flow, it's all about the gold and the gold movements. It's not been about Bitcoin. But at some point, Trump was talking a lot about reserve asseting, Bitcoin and all of that. So it's almost like Bitcoin and crypto have been pushed a little bit into the closet. And we're going to get our road show and our show and tell in Fort Knox, and there's all the gold. So it's about gold, the story. And gold's a little bit toppy. We feel we've made two big technical targets there, and it's looking a little bit toppy. So it could get a little bit of less attention, and then crypto slipping a little bit, but then they'll start talking maybe about trying to reserve asset. In my worldview, they want the digitized reserve assets because that is the derivative one that takes you away from actually having the full exchangeability. I'll leave you with one last thought because I've said a lot, but I interviewed Lynette Zhang last night, and one of the key things she says that I thought was a real point drop is that everything is a peg, it's not backed, unless you can ask for the gold. So anything they offer that says, listen, it's pegged to gold, it's pegged. If you can't go to a bank or an institution and demand it held, it's a peg, not backed. If you can get, and you can exchange your dollar for that 1 ounce of gold or whatever the fractal would be today, that is fully backed. And I think they don't ever really want to go to fully backed. They're gonna slip you into a derivative option, and that's where I see the digital money coming in.
It actually makes me think of what JP Morgan said in one of the minutes of when he was establishing the central bank, or I forgot it was in the Senate. He said like gold is money, everything else is credit, and it's kind of I think goes back to your point. But now, let's say if you're an observer and you look at the markets in general, there's always like the leading indicators of like what basically drives prices and what it influences on other asset classes. So for example, the S&P, for example, would be a leading indicator in terms of, let's say, the performance of Bitcoin, right? If you see like that the S&P is topping, then it probably is also a top for Bitcoin. What are, let's say, the biggest relationships that you guys really look at in those terms? You mentioned already the debt markets. What other things? The dollar?
I obviously look at the debt market. To me, the debt market is the thing. Yields are the thing. The cost of money is the thing. It's a debt-driven society. It's a debt-driven market. It's a debt-driven economy. It's a debt-driven government. So when the cost of debt becomes higher, when yields spike and bond prices go down, that's always a shark fin for every asset class. In terms of the S&P and the kind of, and even gets into the Bitcoin correlations and the gold correlations and the market outlook, I think one of the things fascinating about the crypto crowd and the gold crowd is our macro views are very similar, actually. I would argue that the Bitcoin campus did a really good job of appropriating the gold narrative to create a Bitcoin narrative, but that's kind of a low blow, but you can't ignore the power of Bitcoin. In terms of the markets this year, the technicals, of course, are absolutely fundamentally important, and they're technical and they're wonky, and for a lot of people they're too technical to understand. I respect that, but sometimes you can make it simple stupid. And last year at this time, literally a year ago at this time, I had to plug my nose and go long the risk assets because the Fed was not even having to be dovish, just speaking dovish. We didn't even see rate cuts until September, but already by this time Powell was out there talking about rate cuts, and they were speculating on 6 or 7 for the year ahead. But that little galvanic reaction from this drug-addicted S&P and NASDAQ is we're going to see a more dovish Fed long on. And so I was plugging my nose and risk on. This year I came into it with a very different view because some of the indicators are as simple as what the Fed can or cannot do. It's just that simple. The markets are that Pavlovian now, risk on, risk off, based on Fed being hawkish or dovish. There's also just a reminiscence of history. Timing this is very hard. That's where the technicals are very important to trace these, especially if you're trading daily or weekly, if you're having a larger macro view. But I mean, with me, looking at this year, I see things that are fundamental. The Buffett indicator is a classic, right? The GDP to market cap. But not just that Buffett indicator at all-time highs, which always peaks before an uh-oh moment, always. But the other Buffett indicator is the fact that Buffett himself has $330 billion in cash right now. He's built another $130 billion in the last 12 months. So a lot of things good or bad about Buffett. You can't deny he's iconic in the space, but when Buffett's going to cash, that's a leading indicator. The narrowness of this market is more narrow than it was even during the height of the dot-com hysteria right before it crashed in April 2000. Or, the Nifty 50 in the 70s seemed narrow. Then we went to the fabulous 7 and then the 5 and then the magnificent 3. The narrowness of these companies, again, they're not bad companies, NVIDIA, Facebook, Google, etc. They're just overpriced, like Cisco and Commerce One was, or Lucent, etc. in the dot-com bubble where I was actively trading. I see a lot of history repeating itself right now. And so this year, I'm not nearly as positive about the markets. And the technicals, as you guys both know, are pointing towards that uh-oh moment. And not just Ray Dalio or Druckenmüller or Buffett, but the technicals as well, and the fact that we've enjoyed the last of our martinis. Art Laffer's talking about an S&P at 8,000. Maybe that's the blow off top, but the mean reversion to come. So I see the madness of crowds of McKay. I see the mean reversion of that theme of Ben Graham too in value, and the mean reversion force of Robert Farrell. So McKay, Farrell, and Graham are coming to fruition right now. I think in 2025. And the technicals support that, but again, the markets can stay irrational longer and you can stay solvent if you're trying to trade that. That's where the technicals are really important to pull the trigger on whether you're hedging or going long or going to cash. So long story to a short answer, 2025 will be a lot messier than 2024.
So but you also draw a quick comparison between the dot-com bubble and the current state of affairs, right? But I think there are a few fundamental differences. In the dot-com bubble, it was largely speculation in terms of internet companies going to do well. E-commerce, people understood that the usability of e-commerce was going to be huge, but there was no actual ordering. People kept on going to stores. Right now, we are also in a space where the innovation that we have, AI has been, the hot and trending topic for a while, but we see a lot of usability and usage of those new innovations and tools. Similar to blockchain, apart from individual currencies, blockchain technology is being incorporated in many more companies. So I think that there is more actual value add right now with the new innovations, AI, blockchain, compared to the internet back in the 2000s, right? Would you agree on that, or?
Sorry to interrupt this episode, but I'd like to tell you more about what we do at GoldRepublic. At GoldRepublic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, securely saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at GoldRepublic, we offer real assets to safeguard your generational wealth.
AI, I'm the first to say that AI is going to change the world dramatically, no doubt about that. But it's not going to happen overnight, because we have companies out there which consist of people that need to change, and you'll need to see that being implemented in these companies out there, which will take time. And what you also have is that you have people have already been pouring into these, stocks and whatever it is, because in the anticipation of this happening. So the front running here is massive already. So I completely concur with you that we're going to see fantastic outcomes of this, and I think this is the start of the fourth industrial revolution, and it's going to be extreme. The things we can do in 20 years from now is going to be mind-blowing, no doubt about that. But it's not going to save the day right now, and I think that is the difference. I think the difference is that we have been front running on so many things. We have been taking up the free lunches in terms of printing money, trying to stimulate an economy through monetary stimulus, and again needing to find out that it doesn't work, like it didn't in France or in the 1700 and what else we've seen in through times. You cannot solve the solvency problem with liquidity, and that is what we've tried now for 16, 17 years. So I think you see that, and then you said there's no speculation. I would very strongly argue against that. I actually think that the whole, what you see in crypto is pure speculation. So when I see people talking about, is this coin going to be this coin or that coin going to be that one? I mean, and that's also part of your business, obviously, but I see that as speculation, I have to say. I think it's, people often do not know much about the technologies down beneath. I can say one thing at least that I'll be pretty certain of, that is, there's not going to be as many surviving companies, technologies that will actually come through at the other end of this when you have the shakeout than we have today. So there will be a lot of pain in that. And I think that is pure speculation when you see young people coming in and understanding and thinking 10 times up is that's a natural. I'm a natural born trader. But then they see 40, 50, 60%, 70, 80% decline. And they say, what's going on? What's happening here?
Yeah.
I mean, the whole setup there is just, to me, flashing that this is actually based on speculation, and it's worse than we've ever seen before.
If I could come in on there, we've got to remember Bitcoin's really only come in 2009, and it hasn't truly faced what I consider the first depression moment, which was the subprime. So it's kind of, it's still, whilst there is the 4-year cycle and there has been clear bear markets within that, of some severity, it has to be said, in terms of the downside beta, particularly losing 80% often. We're yet to have that, what I would consider the full dot-com moment, and I think there's a complete washout. What you were saying is, for every 10 pets.com and bridal.coms, there's only really one Amazon or eBay, and I think the status tokens are going to be the winners, largely, and they're going to be very much in the surveillance finance category, and you're going to see a lot of the Me Too coins, and there's a lot of that are just copies and clones and different names, and I think we're almost being mocked by meme coins in some instances. Some of them are parking bays that will have some technology uploaded into it and maybe turn into something, but a lot of them are literally gambler tokens, I would literally say. So I think we've got a washout, and it's always after. The best buy comes after the first major washout of those that remain standing after that event. That was the buy Amazon at $6 or $7 after it had traded $97. That's your entry point. Otherwise, you're going for the full roller coaster ride. Yes, you get the joy of the upside and you get the depression of the downside. But the bad point, as I highlighted yesterday, is most people are forced sellers at the bottom. So if you're in too early, you get washed out, never to be back in again, and you're too butthurt emotionally, psychologically, to actually engage. So having some ammo on the sideline is a pretty good idea, and waiting for that washout. And I think all the economics are lining up for that to potentially happen. I don't think crypto's going away. I think it's serving a purpose, and I think they're going to be anointed winners. Just as Facebook and all of these supposed created in a garage miracle unicorn companies are anointed, supported. There's a bit of a VC support very early. They run bottomless overdrafts for an incredibly long time. I mean, how long did we listen to Amazon making zero profits and running huge losses for decades? That was all part and parcel of the great anointed one. And I think we go through a similar process like that for crypto.
Agree. But you had an 82, 83 drawdown on NASDAQ from the top in
Correct.
2000. And I completely agree with that. Yeah.
Those clever guys in the garage or at Harvard Yard at Facebook or creating Amazon or Google and way back, they weren't trying to create an alternative fiat. They weren't trying to create an alternative to the US dollar or other sovereign currencies. And so it's a little bit more of a threat, and yet it's just as much of a speculation opportunity. It's just as much of a bubble creation. It's just as much of a get-rich generation like we did in the 90s. Again, I was there during the dot-com bubble. It was fascinating. And there was a famous commercial in San Francisco. Last year, you were a millionaire. This year, you're just 29. And it shows you leaving the dot-com bubble, driving home back to the Midwest after making a lot of money in the West Coast. That's an extreme example. You can't ignore the power of Bitcoin. And it certainly, as a speculation asset, we should talk about it. I'm not going to give the answer now. We should talk about, is it truly a store of value? Is it truly a medium of exchange? Does it truly have use, or will it in the future? The difference between this tech asset and this tech generation is the actual, I'm not ever fond of quoting JP Morgan or Jamie Dimon, but if Bitcoin truly were successful as an alternative currency, why the hell would any sovereign nation support it or allow it? Unless it was a speculation asset that you could take a profit of, sell, and then pay down some debt like El Salvador. To me, that's a good use of a sovereign created bubble. Don't know if you can prove it or disprove it, but to poo-poo Bitcoin is just a joke or a non-issue or a casino chip or a home of young fools is very condescending. And the market cap of Bitcoin is massive. And Voorhees has said, if it's a tulip, it wouldn't hit all-time highs, lows, and then new all-time highs. The Metcalf rule, a lot of really smart pro-gold guys that I know are absolutely long Bitcoin and excited about it. But they're excited about it for different reasons than they're excited about gold, although both asset classes use the same narrative of use. So these are things to discuss, not to say I know and you don't, but I think they're important questions. And I think it's very important not to have a binary discussion on gold or other asset classes and Bitcoin, as Bitcoin either brilliant or stupid, and gold is either old or outdated or too brilliant. And how do we reach a middle ground? Can we agree on anything? Is it a store of value mathematically, traditionally, or in the future? All these things need to be discussed. And other things, and not tinfoil-headed things, but I think it does matter who really founded Bitcoin and why. Where does it come from? Every Bitcoin person I've talked to, whether you were in Commerce One or Lucent or Cisco, you knew who the board was, where it met, and who owned it and why. Who is Satoshi Nakamoto really? What's the narrative there? Why can't we answer that? Why would a sovereign leader like the United States president, who called something a scam 3 years ago, create a stockpile for it 3 years later? Why would BlackRock's interesting leader call it a scam 3 years ago and have a $50 billion ETF a couple years later? Again, it's not to say that means Bitcoin's full of crap. It's just we got to answer these questions to trust it. And with its standard deviation and its maximum drawdowns, how can it be a store of value? So, these are just things that I want to ask about, not to mock. Because I think to have a really good discussion is for the gold camp to understand Bitcoin or Bitcoin to understand gold, you've got to address these elephants in the room. And it doesn't also mean that gold only moves in a straight direction. That's all you need to do to save yourself. So these are not helpful debates to mock each other, but to discuss rather than debate. And I think that's important. But I do see it as a very different tech invention than the Internet of Things or the .com of things during e-toys, e-pets, all that stuff that I lived through, or the IPO that was useless that made us money. Crypto in general, and Bitcoin in particular, is talking about an alternative to the US dollar, an alternative way of spending. It's a threat to the sovereign currency. And now our president is stockpiling it. Why? These are things I think are really worth discussing without mocking. So.
Yeah, and I definitely agree that speculation is driving the short-term price action for sure, because investors always want to front-run the next thing that's about to happen. But I do think that the information spreading across the globe is now rapidly increasing in terms of speed. So it's way easier to adopt new technologies, both on AI and blockchain. That's why the youth is also engaging with it quite quickly. That was different when the internet bubble came, right? You still had to build the whole infrastructure for people to access the internet in the first place. So I do think that this is catching up a bit quicker, but definitely it's a speculative high-risk asset for what it may be in the future. It's just that the blockchain technology right now seems so solid enough that we think, oh, it's secure enough to store data such as actual value there, right? So I think there are definitely some things, and I think that looking at blockchain technology, apart from the adoption not being there yet, I do think there are some use cases, and it's easier usable compared to actual gold. I think it's also a more scalable system for people to engage and interact with.
I think what we see with crypto is a solution seeking a problem. So you're actually looking at something here where you have a technology that will be a solution to a lot of things. But the problem that it's right now trying to solve is the wrong problem. So people are talking about this as currencies. I think what you have down beneath, you have the blockchain technology, the checks and balances, the smart contracts, and whatever that can trigger in terms of things where you can take out the middleman in the financial sector in many places, make it more secure to trade across the world. So we actually know I will actually own that whatever property somewhere, and I don't need a South African, Danish, whatever, where we come from in the world, lawyer to tell me that I do that. There will be checks and balances. That I think has a tremendous worth. That will be supporting, that will be the next layer of the internet, as we know. It will be what actually helps us trade more in the world, because we will be able to go out and we can trust places and trade with people that we may not have traded with before.
A solution in search of a problem. I'm so glad your view on this. Again, I think of Voorhees. I was listening to him a year ago, pounding his fist, and I believe he's sincere. Why am I in Bitcoin and not anything else? I don't trust government, I don't trust banks, I don't trust the system, and I don't trust sovereign money. And then fast forward a year from that, and we have a government that is now galvanic about it. We have senators trying to pass bills to even sell gold certificates to buy more Bitcoin, to have a stockpile of Bitcoin. We have a president who's tweeting about Bitcoin. So now it is becoming more politicized, more centralized, more part of the system than its original narrative suggested. I'd like to be a fly on the wall as Voorhees is trying to explain that. Again, not to mock him, but if the idea was I want to be outside of a system, I don't believe it. I totally respect that. Most private gold, physical gold owners who keep their gold in a hole in the ground outside of their jurisdiction with an insider trading desk to get liquidity in fiat already know that. That's why we have clients who love that. And I see if Bitcoin can accomplish the same kind of freedom and autonomy and decentralization, that narrative actually spoke to a lot of people. A lot of people who own both gold and Bitcoin, like Voorhees or Leopard and Ronnie Sturfla, who are friends of mine. So I get it. So it's not they're stupid for being in Bitcoin. They're trying to play both sides. But now that narrative of trying to be outside of the system seems weaker. Decentralized seems weaker. That appealed to the young, skeptical, distrustful of their system generation that you represent, which I respect. I worry that they're being led into a Normandy landing, though. When the door comes down, the bullets fly. No matter how many push-ups you did, no matter how many preparation you did, those bullets are agnostic. You're going to get hit at some point.
Yeah.
And it doesn't matter how much training or how much the infrastructure works. What I see surviving after that bloodletting is DLT, the digital ledger technology, blockchain, and maybe Bitcoin lying in the bloody, frosty water.
And most importantly, tokenization. If I can make 2 points.
Yeah,
So first of all, your problem solution, I like the analogy. The actual problem right now is the destruction of a reserve asset that was put forward as a reserve asset, debt. And people are scrambling. That's why you have a hyper-valued stock market, because in a binary world, if the one side is collapsing, you run into the other. And the problem with Bitcoin, obviously, it's high beta. And in fact, when you need your money most, you know, the usual bankers scenario, they give you brollies, and then when it rains, they take them back. When you want credit, they're always offering it to you, and then in the downturn, they actually call it in. The problem with Bitcoin is it has an incredibly high beta to the downside. When you most need your money, it's going to, you know, even on a minor
to interrupt,
crisis.
just for the viewers who might not know what beta is, because I think as a trader,
It's a risk matrix. So how volatile are you when things get bad? Gold lost 4.5% in that medium-sized crisis that was a little bit of a partial yen trade unwind in August within the year just passed. That's a recent little wobble that we've had that's a little bit like now, only probably a bit more severe. Bitcoin lost 30%. So if you lost your job during then and everyone was right-sizing, you always end up selling a low beta point, which is actually at the bottom. Many people who are relying that as a reserve asset. It's not fulfilling the reserve asset role. So that was point one. It's too volatile for reserve asset status. Remember, bonds barely moved. They crept upwards for 40 years and they paid a minor yield that was probably below the true inflation rate. That gave stability to the high beta of equity. That means the volatility of beta of equity, but gave you more return. So that's point number one, where that's not solving the main problem, which is the main problem, debt collapse and what you were saying. Point number two, there's the tokenization, which worries me. So Larry Fink actually is most excited about tokenization, not Bitcoin. And when you hear him speak, he says, you no longer need to worry about governments. I can know who you are. You can be anywhere in the world. And you will have an ID, and you can own that, and you can purchase this. And he's selling it, you're escaping your government. Meanwhile, what's actually happening is you're getting an open ledger that can be investigated by anyone in the world, that can ascertain your wealth by wallet, etc. And tokenization will become derivative proxies. One of the catchwords are RWA, real world assets, will be reflected in a digital ledger. That could allow me, and the reason that's a concern is I've also read Vitalik and a Chicago professor discuss how people really don't need to own things. You know, Uber has no taxis, Airbnb owns no property. This is the argument.
The sharing economy.
It's all, you can be a unicorn and own nothing and you should be happy. It's got a little bit too much of that World Economic Forum vibe. And they discussed self-certing the valuation of property. We're sitting in a grand property right now. I'm sure the owner wouldn't like to have to tell the South African government what valuation he puts on it. Because if they deemed, and this was the Chicago professor's paper, it should be a liquid market for all assets. If you're deemed to have undervalued your property, it's an automatic sale contract for someone who thinks you've done so. So actually, and there's an automatic rental contract, I assume, that gets triggered. So you would technically, in property conveyancing, which is one of the big assets that we all hold, it's the foundation of balance sheet, have a highly liquid market all of a sudden, where all your conveyancing is already pre-packed in a ledger, in a smart contract, as a real world asset token, and I could purchase your car in another part of the world and trigger a rental contract for it, and I now own your Ferrari and you're paying me X a day. So these things could all be pre-agreed. That is where the thought leaders, the quangos, and these quasi-authoritarians that are unelected, that's the direction they're looking, and Larry Fink is facilitating that. And some of the best and biggest investment is particularly targeting the high value assets like real estate, property. And eventually the day may come where anything of even moderate value that you purchase will be reflected in the ether, and you will have this duality of a physical world. However, anyone can engage, and ownership can change via this real world asset tokenization. And I'm deeply uncomfortable with who the guardians of this grid are and what their long-term intent is.
That's the wolf in sheep's clothing. This incredible modern technologies, this efficiency, this transparency, but it's also it's very scalable as well. This tokenization of all things. It's also controllable. It's also surveillable. And again, you can use the extreme examples of the trucker convoys in Canada during COVID. And this is the fear. Who really controls the matrix, so to speak? That's certainly more efficient than wiring money through SWIFT or intrabank loan transfers. You can do, like Vori says, I can send 5 million in about 5 minutes with Bitcoin. Absolutely seductive reality and truth. But I'm not saying Bitcoin is, and by the way, it's not also as anonymous as people think it is either, but with this tokenization, this XRP new highway, this digital ledger technology, beautiful, 90% of the narrative is beautiful. The 10% that's not discussed, from Davos to New York City, is really scary. And that's the great irony. This thing that was supposed to be decentralized, maverick, and outside the system has a very foundational system that's completely controllable. And again, this is why that boring old pet rock buried in a hole in the ground in a jurisdiction that protects gold that I can transfer into fiat, yes, much slower than Bitcoin or crypto, but much more autonomously, much more legally, at least as of now, and safer, still appeals to that old man in the gray hair now who used to trade tech stocks in the late 90s. But again, it's not to mock the Bitcoin crowd, and it's not to mock I wouldn't have had the balls to stay in if I bought it at 1,000. I would have sold it by 3,000. Those that have stayed in and profited, I've met a lot of them. I'm envious of the fortunes they made. There's nothing wrong with that. The question is, what's the real use after the consolidation narrative is over? And again, another question I had besides these dangerous points that Francis makes up. When I had my lottery ticket on the tech bubble of the Internet of Things, then I had to be a family office guy. Then I had to allocate to other managers, the good, bad, and the ugly. I always looked at any asset class or manager in 3 ways. What's your annualized return? Bitcoin blows the doors off every asset class in annualized return. It's over 60% since inception, primarily because 1 year was up 5,000%. But annualized return, there's nothing that beats Bitcoin, nothing. Gold doesn't even come close. But then I look at your maximum drawdowns. If I'm looking at a manager, what kind of stomach pain are you gonna give me over the next 10 years? If you've got 4 maximum drawdowns of greater than 80%, you're kind of not invited to my wedding at that point. I can't. And then if you have triple digit standard deviation, that's the third thing. So that to me isn't a store of value, it is a speculation asset. Again, I would ask you, is that just because we're consolidating? This is what Mahlers and Voorhees and others will say. And you may be right, because the Metcalfe rule of growth, Bitcoin is still very young, it's got a long way to go. It could have a market cap of 19 trillion in 10, 15 years, and you'll get the last hearty laugh. So I'm not saying I know that. But right now, do you think that fact that it's clearly mathematically not a store of value, it's certainly not being used as a medium of exchange, but that it's consolidating and that you're playing the long game here because of those things, those properties will be there? And that's a question, not an insult, I'm asking you.
No, indeed. And I think there are 2 main aspects, right? We see 2 sorts of countries and regions that are interested in investing or using Bitcoin as well as blockchain technology. I think the part that you guys are referring to is mainly within the high value, high GDP countries where people have disposable income, want to find the best investment for the price that goes up. But there's also an actual need for having this store of value where it's already being used. So that's on the other end of the scale. Those are the countries with the high inflation, low trust in government, where they really have a need to sort of escape what's happening locally. And we see higher adoption numbers when it comes to user numbers in those type of countries. So let's take Latin America, for example, huge inflation in the past few years, Turkey, huge inflation in the past few years. They are actually happy that they can own something, not as inflationary as their own fiat currency. And also, traceable is not the same as controllable. Sure, you can trace and track whatever transaction is doing on chain. You can see exactly which wallet it's going to. So there is a level of surveillance possible on Bitcoin. But it doesn't mean that the government can confiscate whatever you have on your self-custody wallet. You could purchase in Turkey your Bitcoin. Government wants to seize your Bitcoin. You go to another country, or you just don't share your private key, and no one should be able to touch it. They can, of course, have surveillance or rules on top of that, but it's a bit the same as in the Great Depression, where people were hiding their gold in the backyard, right? So you can more easily do that with Bitcoin. You can even travel to another country, take that with you without anyone being able to control or seize that immediately. And I think that need is also there.
Yeah, its portability is amazing, and its speed is incredible.
But the information and the ability for them to even accumulate that information at a global level means they could provide that information to your local IRS or
It depends.
person who's offended.
But it depends if, let's say, we're talking about Lightning Network. Lightning Network also, like, there's a black box within Bitcoin where with the Lightning Network, you'll be able to create a bridge. And whenever happens in that Lightning Network is not traceable, actually. You only basically sync it back on chain. And so
But how is that not a direct threat to any tax authority, any sovereign
it
wealth?
definitely is. So that's actually also my point, is that in the end, that untraceable, like that lack of control is actually on both sides. My theory is that the way sovereign nations look at it is that if we're not on board on a big chunk enough of it, like having big reserves or something like that, we will not be able to influence it. If, let's say, the United States has a big reserve and has the ability to move the market just like it did with gold, it will be able to suppress it in one way or another. But if it doesn't have tokens on the table, it will not be able to chip.
Well, won't the U.S. just do what El Salvador just did? Let's take the El Salvador case study because that's really important. It was a big headline, a big tailwind for crypto and for Bitcoin in particular. And we can spend an hour on it. The 30-second version of it, though, really, it's very sad. Bitcoin was a great speculation play. It went to the moon. They had the courage to stick it out. They took the advantage of the appreciation, sold out, paid a lot of debt. And it was considered a national currency. 1% of the population actually used it. So it wasn't really used as a medium of exchange. So it really was a speculation play that went the right way for El Salvador. If it had gone down, it would have been just dramatically bad. It went the right way. They sold out, paid off some debt. And what are they doing now? Fast forward to today. El Salvador's made a deal with the World Bank and the IMF for a big loan, which is the height of all ironies. Those loans are usurious, appalling, criminal, and John Perkins' Confessions of Economic Hitman, they went right back into the lion's den after doing a Bitcoin speculation play. Why wouldn't Trump do the same thing? Create the new bubble in Bitcoin, pay down some of our 36, 37 trillion in national debt on a speculation play in an asset that's actually anti-dollar. Because he doesn't care that it's anti-dollar. He doesn't even worry about it. It's never going to be a threat to the dollar. It's a bubble. He could have played it with NVIDIA, but this is safer, and he can pump the story better. That's the cynical view I have.
Yeah, but I agree. And the anti-dollar thing is a big thing, because if this is going to play out like some of the DeFi society.
Oh, it's good for Bitcoin, by the way.
Yeah.
Ride the front run the Trump trade, right?
But I think if it was really to run out of follow the path where people think, okay, this can become reserve currency, they can actually take over the dollar, and it will become a problem for the U.S. In terms of how are you going to finance things, and could you actually just allow that you are taking this where today you have the U.S. hegemony, and you actually, which is the core of the strength of the U.S. as I see it, and you just place that in somewhere, and you don't even know who actually created this. I just don't see that happening. I think if you again, you're talking about a problem here in developing countries where you need to send money and you need to be able to store value also. And again, I also question the store value, which Bitcoin has been portraying over the years. But the other part there is, again, this about a solution seeking a problem, because there is a problem there, yes. And then Bitcoin comes in and says, we can use Bitcoin. But the real, by the end of the day here, I think there will be some kind of centralized approach to this. There can be a world currency, it can be a new kind of, the monetary reset we talked about, where you again need to introduce sound money, because we need to clean up the mess we have now with all the quantitative easing and the things that have been going on over the last few years. And in that respect, you will see some kind of, I know people hate that in the crypto world, but the central bank digital currency, which then will be supporting some kind of basket of currencies, again maybe supported by gold as the anchor. I could see that working out, but seeing Bitcoin coming in and taking that by itself, and it's just like whoever created that, and then we're going to adopt that solution in the world. I just don't see that happening.
We've got an example on the surveillance versus controllability comment. You've had iPhone revelations from Snowden and Assange. The notion that they will just be able to see it and not eventually control it. You've got Peter Thiel handing information on WhatsApp that's leading to Palestinian deaths in Israel. You're seeing the weaponization. Once you've created the data, they will find a way to leak it. They will find a way to give it away. The people, you have to look at the microcosms that have already occurred to see what's coming for this particular instance. And there is no clear sovereignty of data that can't be weaponized and utilized against you in all the revelations we've seen in device privacy. The biggest victim, as I said yesterday, is privacy of the citizen. And they seek to have, as a cardinal right, the knowledge of what you do, where you do, how much you have. And the control is the eventual goal with absolute intent, not through corruption and, oh, it just got leaked here. Those are cover stories typically, in terms of my take. So I would push back on that. And the other key comment that, so Snowden, Assange has shown us that that side is not going to play out. And the end goal is going to be access to all of us. In terms of the financial
which
system.
ironically is the opposite of what Bitcoin wanted to begin with. The narrative was to be
and the
away
whole
from
goal was to capture the libertarian movement first as the most cynical audience, that if they had them, everyone else will follow. So it's kind of, if I can convince the anti-meat guy to eat steak, who's the vegetarian, everyone will switch to eating, well, let's say Beyond Meat instead, 3D printed meat. If I can get the healthiest person in the room, and then everyone else, well, if it's good enough for him and he's a public persona. And that's kind of how they've gone about the capture, in my opinion. So the whole privacy and secrecy, we are having our personal sovereignty attacked, and part of that reason is because I feel the intent is a technological oligarchical grid system of absolute control. And that's unfortunately how government goes. It keeps adding power and power and power, and we don't have a national government. Actually, we're already well beyond that. You saw in the events of CB19 the degree of coordination. There are unelected quangos organizations that get to make decrees that have far-reaching. So that's why I worry when Fink says, yeah, you'll get past your government, everyone can see, and you can see what they have and all of this. It is not with your interest in mind. It is the tax. You now have discussions of unrealized capital gains taxes. You have real-time taxation being discussed. All of these are fantasies, particularly when you have highly indebted countries that are in scavenge mode. I call that a technical term of mine. When your debt is collapsing and you're cutting services and you absolutely want to keep feeding all your aids and all your other things, they're going to go about it
But even if your control matrix is correct, as a defense to Bitcoin, I'm agnostic to that. I'm a Bitcoin millionaire. That may or may not be true. We can argue about it, but it's still making me very wealthy. It's going up. It's being mainstream now. It's being respected by sovereign leadership. It's making headlines. It's making massive price moves despite the volatility.
And that should concern you as part of the mainstreaming it back in. So initially, by rejecting it, they attract all the anarchists and the anti-government people. And then they slowly, over time, with the slow drip poison, which is always the way, they nationalize. Is it time to think again about the amazing possibilities? And it's.
But let's give the Bitcoin guy a chance.
No, I think that the privacy concern as well as the centralization concern are concerns that relate to the status quo already. Most of all that data already exists. Like, what's easier? Of course, you can extract the data on chain. There are also technological tools to obfuscate the transaction flows. Using Lightning Network is currently not being traceable. You can store it on a wallet that no one knows is in whose possession, right? Same as the biggest wallet out there, the Satoshi wallet. So that's on the status quo of privacy diminishing. Sure, that exists in the centralized non-DeFi world as well. All the banks are already sharing information. Cash is being less and less used. So on everything fiat is being monitored more and more. We see that same trend happening in the cryptocurrency space, right? More regulation coming into play. In the EU, you have the new MiCA regulation that is into force since late last year for centralized asset service providers. Travel rules there, so everything below or above €1,000 worth of crypto already needs to have KYC information on both sides. Currently, only touches the centralized part of crypto, not the decentralized part, but they're already having discussions on, okay, how can we include this into the system? But I think that already happens with fiat. So if you compare that, it's still somewhat similar. And then to the centralization aspect of things, right? You're saying, oh yes, if you want to provide services for payments, you still need a central entity controlling that or verifying those transactions. That's already with the world that we currently live in. But the consequences of that is that people are using Western Union to transfer money from, let's say, one country to another. But it's hugely expensive for people to do.
Correct, yeah.
Because you have this centralized entity that is facilitating that as a service, verifying if everything is correct, and then sending it over physically sometimes when it comes to cash. Also with the bank accounts, banks is already a centralized service that you could say is widely available. But there are more people in the world having access to the internet right now than to bank accounts. So sure, there's no direct need here to set that up, but the centralized solution is not a solution. We think that the blockchain technology might be partially incorporated in those central entities to make it more efficient. Sure, that can happen, but it still then solves the problem for them for it being too expensive or inaccessible, right?
Well, you probably have much more knowledge than I have on this with the technical details in that. But in the world also, we talked about yesterday also, if we're going to have a cleanup and you're going to have a kind of a washout of, in the economy from what we have seen, and you need to clean those things up. You do not want, and especially in this stagflationary environment, as a government, as a central bank, you would not like to see that there are paths around the economy. You want to have that economy, you want to have the money flowing into that. You want to revitalize or get the stocks up again and running again, and so I cannot see a world there where you simply let these doors being open for money to flow around the system. And we may not like it, but I think we'll be forced to like it, or be forced to accept it, because that is the way we have to reinflate the system when the system starts to break down.
What is the Bitcoin, and again, I'm asking, I'm not attacking this. I really think it's a discussion, not a I got you, because I don't know the answer.
It feels a bit of a disproportionate.
It's really unfair.
It intended
really
to
unfair.
be like this.
It's really
and
unfair.
I think you're doing great, Roy.
Yeah.
And this shouldn't also definitely be like a gold versus thing.
No,
or
it really
all
shouldn't.
against Bitcoin.
It's
I think
really-
it's an open discussion.
It's really gotta be, because
anyway, so
I
just-
want us, because if Bitcoin can be a solution, and really at some point you can buy cars and pay taxes with Bitcoin, I'm going to change my tune completely. So, and I don't know the answer. What I did see to this theme of centralization and the uh-oh moment to come that we all agree is coming, one way or the other. During COVID, we can go into that rabbit hole, but we all kind of are cynical about what we went through during COVID. Whatever our generation, whatever our view on vaccines, we won't go down that. But it was a weird moment in history. And it was a weird time. And in that part of the world that does centralized things, crisis is always an opportunity. And I remember writing an article right in the beginning of the COVID hysteria, with the IMF coming out and saying, wow, we're having the biggest crisis since World War II. This is it. Klaus Schwab, this is a game-changing moment. Well, again, to any of us who lived in Europe, who had grandparents who died in those wars or suffered in those wars or fought in those wars, you can't compare COVID to Dresden, Hamburg, Rotterdam. Come on, it's insulting. Or Auschwitz, for God's sakes. So you can't even go there. But they were creating a narrative that this is such a new crisis, as big as World War II, that we need a new Bretton Woods 2.0. We need a new currency, a new debt structure, a new kind of arrangement of the deck chairs on the Titanic. Not our fault, by the way. Not central banks, not sovereigns gone criminally negligent with spending and debt. No, it's COVID that did this to us, folks, not us. Not central bank or XYZ. Oh, and by the way, what we're going to do is we're going to have a central bank digital currency on a blockchain digital ledger technology. It's going to have to be credible in a global setting, so it has to be anchored in some gold coverage at the base. Bitcoin was never discussed. Blockchain was. And it's almost like they're slow dripping us towards this CBDC solution in our name of our benefits, because COVID did it to us, not our governments, not our central bankers, not our politicians. Now COVID did this to us. We need to now, because of this crisis, which is out of our control, the solution will be central bank digital currency, digital ledger technology, the XRP and Ripple of all
And
things.
we'll have to make sure that people use it, so we'll have to make sure that it's
and
prohibited
the
to use anything else.
XRP Ripple Highway, which was designed in 2001, 8 years before Bitcoin mysteriously arrived onto the scene, created by some of the same NSA alumni. I mean, again, I don't have all the answers, but it seems really interesting that Christina Georgieva comes out in 2020, like any PSYOP, telegraphs something that's coming, and of course that's exactly what's coming. And I wrote in 2020, that central bank digital currency train is coming. There's nothing's going to stop it. And Bitcoin, unknowns to many Bitcoin investors, may be complicit, unknowns to them. And again, if I had bought Bitcoin at 1,000, I wouldn't care. Bring it on. I'm still going to go long Bitcoin. It just makes me question. And by the way, there's ways gold can be manipulated and ways gold can be nefarious. So I'm not saying gold is pure and pristine and Bitcoin is corrupt. And if you're smart, you're going to follow me down the Shangri-La road to Zurich and all's going to be well. But we have to address these questions. And again, it isn't a coincidence now, 4 years after COVID, that we're slow dripping towards the same central bank digital currency. Even stablecoin and Tether is just CBDC.
On the other hand, the Tether thing is a great, I think also Francis has a bit of an opinion on that. But if you look at the way now the US has positioned themselves, also with Scott Bessent and all the others, about actually going from, at first, advertising from a Bitcoin reserve to then cryptocurrency reserve and then now to digital assets reserve. On the other hand, they also said that they would stop any type of work on any CBDC that would involve the dollar.
But again, that's really a nice, wonderful magic trick. Left hand says one thing, right hand's doing the other. It's absolutely true technically that we're gonna have the optics of we're not going under the Trump administration CBDC. No way, we're better than that. And he means it. I think he means it. What he doesn't understand is Tether, which is really a pair trade with Bitcoin, because the bigger the Bitcoin bubble, the bigger the Tether trade. You can trade between the two. Ripple invented it. But the bigger the Tether trade, that buys US Treasuries, by the way. That solves a little bit of Besant's problem and Powell's problem at the Fed. But isn't Tether just central bank digital currency, but not coming from the central bank? It's still programmable, trackable, and seizable. It's still a wolf in sheep's clothing. And again, I don't say Trump did that deliberately. I don't know, but I'm sure a few people behind the scenes in the environs of Washington, D.C. and the NSA tech geniuses and code writers saw that. And again, so Tether is central bank digital currency. It's just not coming from the two-tier banking system, but it's just as scary in a lot of ways. And it also solves the problem of taking some of the pressure off having to print money to buy US Treasuries, because Tether investors, the man on the street, will do it for you. So it's really fascinating. And if I were that guy in the movies who was the dark villain, this is how I would do it. But it doesn't mean I'm right. It just, these dots are starting to come together. And the guys at Black Swan Capitalist, Francis has talked about this openly. Luke Groman has talked about this. I mean, it's not a conspiracy theory that we know the answers to, but it's raising a lot of eyebrows. It doesn't mean I have the answer, but it does make sense.
What is Russia and China doing? Are they building a Bitcoin reserve like El Salvador, or are they stacking gold?
Exactly.
So they are the most adversarial counterparty to the American hegemony.
Yep.
Follow the big smart money that is doing the second way. Because if the main way is going to end, the alternatives are being provided by the other big players. El Salvador was in such deep trouble, they did almost a casino trade and swang a bat and hit a home run. The big nations are not going to be doing that. And that, in a sense, places Bitcoin in its true place relative, in my opinion, to the big, sound money, well-advised, long-standing nation. If we talk about China, the one thing we've got to say is they play the long game. Nothing changes president to president. You don't have the schizophrenic, 1 minute there's 38 genders, the next minute men are giving birth to babies, and now that's all out again, and we're doing whatever. We don't get this nonsense. What you're getting here is playing the long game, building logistics, building routes, they have relationships here in this country, they have relationships in Panama. That's what suddenly scared Donald Trump, is how big China. I'm in Panama, I know this. The Chinese are there. It's a gateway, it's a trade belt. They know exactly what they're doing, and nothing pivots. It's multi-generational. I will put my money, and not because I want China or Chinese to win. I feel far more acquainted with an American every day than an average Chinaman. If they don't speak English, I won't be able to connect. But if you're talking strategically and principle-based, follow the smart, long-term. The slow dough is the staying dough, not the fast dough. The fast dough is fast in, fast out. What is the generational, long-term, monthly? And China and Russia are showing us the way. And, by the way, Eastern Europe and other nations as well.
China
India
is the world's biggest gold importer and gold producer. And next behind them is Russia, which is 2x US gold production.
And can I say the numbers are much higher than you are hearing? Because even the subsistence mining that is happening here in Africa, that I know people are involved in, a little bit gray areas and all of that, you'd probably call it the equivalent of blood diamonds. Any subsistence mining Zimbabwe, it's going straight up, it's being refined, and it's being taken under the table.
And even Goldman Sachs has said that Chinese gold holdings are probably 10 times more than the World Gold Council says. What is China doing? Playing chess while the West plays checkers in tech, right? Thinking longer term. They're used to suffering. They're used to thinking generations ahead, while Americans think 1 quarter ahead or 1 election cycle ahead. And this is, again, it's the analogy I make with military. If you have a river crossing, and on the other side of the river, which is your border with another nation, you see all kinds of cannons, horses, and soldiers lining up and sleeping and lighting campfires. You don't need to be a military genius to say, there's something on the border coming. We need to be prepared. And if you look at what China and Russia and the BRICS and the COMEX and GLD and SLV, what are they all doing? They're taking delivery of physical gold. They're getting their ammunition ready for a change on the border. They're not buying Bitcoin. They're not stacking Bitcoin. Since we weaponized the world reserve currency in 2022, whatever you think of the Putin war, and you and I have had great conversations about, it doesn't matter who's right or wrong about it, who's the villain or not. But when we weaponized the world reserve currency, the rest of the world said, I don't trust that world reserve currency or that US IOU anymore like I did 10 minutes ago. So now I got to find a better strategic reserve asset. It's not Bitcoin, it's not crypto, it's that boring pet rock, and they're all taking physical delivery. They're already trading outside of the dollar, they're repatriating their gold, they're stockpiling it. Pre-2022, pre-Putin, pre-sanction, average central bank annualized was 118 tons. Right after the war, it went to 290 tons. Again, look at the direction of the troop movement. Look at the direction of the hockey puck. Again, it's not anti-Bitcoin, but it's not Bitcoin, it's gold. That boring traditional pet rock, which is the post office compared to the Bitcoin email, right? The old thing. And again, it doesn't mean Bitcoin doesn't have a role. And it doesn't mean Bitcoin can't go to 1 million. I honestly am not saying that. But I'm just saying we have to step back and ask these questions. How does the Bitcoin camp, is it just we're waiting for consolidation, we're waiting for adoption? How do you ignore the elephant in the room that the central banks, love them or hate them, and I don't love them, are stacking gold? Why? Why is Basel, why is the BIS making gold a strategic reserve, a tier 1 asset next to the US 10-year? That was unthinkable 5 years ago. So you can't ignore these things. It doesn't mean Bitcoin is stupid and gold is smart. But in your Bitcoin techno, seriously intelligent camp of people who see a future down the road, like they saw emails better than the post office and .com better than mail. But how do you ignore that? Is that because it's coming? Or is it just because, well, we can transact, we can tokenize gold maybe some other way with blockchain? I'm just curious, not to be condescending.
There's also one point I would like also maybe for us to discuss is about also like the design of Bitcoin itself, and also like the way that you've mentioned also before, it's inconfiscatable, it's scalable, all that. But it also has like, I think for me, which is not discussed enough, is the limited supply. It has 21 million. Gold has an inflation rate of about
1.1%.
1 point exactly, depending on what's been mined or what is going to be available in the next decades, or even not in terms of what can be taken out of the earth.
And dropping.
And then if we look at then the population growth and about the economic growth, how do we reconcile that? Having one system which is totally capped to 21 million, which a lot advocate is great because that's the real scarcity, or is actually having a bit of inflation good? Like, how do you guys see this?
Well, I want to give Roy a chance. I feel like it is unfair. It really is unfair.
It doesn't bother me at all. I think it's very good to be extremely critical towards something like this. I mean, individual investors are putting significant funds into this new technology, right? Currently, indeed, speculation driven, not absolute adoption driven in terms of usage of payments, for example. The way that the white paper was written is supposed to be for payments. So it's completely fair to be so critical. I think comparing it with governments being either late to the game, I think it's more the other way around. I think the Bitcoin game is so early that I think it's a bit, I think the argument saying that, oh yeah, look where the big smart money is going. Sure, they need more time to strategize or change their current beliefs and strategy and so on. Why would you, if you're winning at the current game, try to switch that game as soon as possible? Doesn't mean that it won't happen in the further future. And then also what you mentioned is, well, Tether, isn't it just the same as a CBDC in the longer run because governments can control a company, an individual centralized company? But again, I believe it just shows the usability of blockchain technology in the first place. If then we will adopt Bitcoin as a full currency, I do not know, but the technology itself is quite solid. Comparing it to Bitcoin, I think that you can make some arguments that it's more harder cash than gold actually is. Same for the mining part. Sure, it's only like just over 1% what is being mined on a yearly rate, but it's already a higher rate than Bitcoin is being mined digitally. So the stock to flow is higher for the gold there.
But it's digital, it's exposed to quantum computing, it's already had an inflation bug hack that luckily was White Hat found. So it's actually not as robust necessarily as put forward. It is entirely digital, and I'll go back to saying, if you are with a government that you don't trust, and you've got refer Snowden, Assange, etc., do you want your primary wealth to be held in digital rail system that they control, or do you want to have absolute personal physical control over a large part of your wealth. That's essentially the decision. And one is, you're literally putting your testicles on the anvil where there's a known man with a hammer.
But I think it goes back to actually the initial point of why Bitcoin was created, this like cypherpunk type of movement where you would be able to have just your wallet and no one being able to know who's owning that wallet. And that I think the biggest risk maybe right now is what also you mentioned with Mika and also regulations, that the gates of entry and exits of all those exchanges of interacting with any crypto and also Bitcoin is being monitored. And in a world maybe where you don't need to go to an exchange or where you could just exchange Bitcoins to each other and these kind of things, or even mine it straight away, I would say that privacy concern is nullified, right? Because you're just a wallet and nobody knows who you are. But the biggest risk in that sense would actually be that in one sense, it's so over-regulated that then all kinds of exchanges need to communicate to their local tax agencies and so on and so forth, and declare, just like as we need also in the Netherlands and so on, how much you actually own and on which address.
But
right?
Alexej, even if we conceded, and again, even if we had complete comfort that it really truly was decentralized, purely private and purely autonomous in the sense that the privacy was really there, that wasn't even a risk, and that the technology could basically guarantee it, and it's certainly stock to flow is fixed, and all of that would, if there wasn't even a debate about that. Let's just assume that, and it is still debatable, but even if we took all that debate out of the equation, you've got this token then, this wallet, this asset, but its volatility is all over the place, and its use is still not literally used as a medium exchange yet. You have to admit that it's not being used. And frankly, you can't take a kilo bar of gold and buy a house at Sotheby's either. So I'm not saying gold solves that either, but I'm saying, so I'm just asking, is the Bitcoin narrative that will come? Get past the privacy and the darker side of the government things and the centralization. Let's just assume that that's not the issue. Just the use of this wonderful wallet to make a transaction, to buy a property, and to do it without worrying about the volatility of the price. I want to buy that house, I see it on Friday, I'm going to purchase it on Monday. What happens over the weekend with the price and with the buyer and seller?
Bitcoin hasn't even shown to be the most efficient token in all of these areas. It's one of the most costly, it's one of the slowest, it has restrictions on rate. When is the first iteration of software ever the best version? Yet you have maximalism, which is a belief system. Because it's almost like we gave birth to the ultimate unicorn, and there's nothing that can be implemented to make it better, faster, and there's no future dynamic environment which will require a change. This is the birth of Jesus, and he is omnipotent and perfect. And so Bitcoin itself, if we're just talking about Bitcoin, is one thing. They're tokens that are quicker, lighter, faster, more efficient. So now you're getting out of the reserve asset. It failed in transactional, given that others are superior, clearly.
Others are superior.
So it comes back to the reserve asset discussion, and to me it fails in the reserve asset, because when you most need it, it's got the highest beta to the downside. So Bitcoin, actually, I'm more bearish long-term utilizability of Bitcoin. I think it's a Trojan on-ramp to the CBD system. It serves a purpose, and like a rocket that has a fuel thing, it gets you that far into the side and it falls away, and then you're on different power and you're on different things. So I think it's a stage that goes through, and actually it will be undermined. It's not going to serve. And you mentioned the 21 million. Well, it's split into BSV, Bitcoin Cash. Now, obviously, people don't treat them all the same, but it's largely the same code with minor flags. That's kind of QE almost.
Well, it's different coins, though.
Yeah, there are different tokens, but if you want to talk about digital scarcity, it's a very tenuous argument versus physical scarcity that requires a huge energy expenditure in an entire system to get 1% out. And the irony is Bitcoin has tried so hard to be gold. That's why it's called mining, and that's why it's called digital gold. Yet it wants to say we're gold, but we're totally better than gold. There's a dichotomy of logic in all of this that makes me want gold more. It's kind of like all the sports cars saying, well, we handle better than a Porsche, or we do better than, all I'm hearing is Porsche. And I go buy the 911 Turbo.
Then everybody's sitting out there can say, well, we can just look at ratio, look at Bitcoin gold ratio, and then we know who's right. The market decides who's right. So
That's
the
the Jack
Bitcoin to
Mallers
gold
of it.
ratio has been going like this, right?
Well, Mahler's Bitcoin is right because look at the price.
Yeah.
But that flies against everything I know about
Yeah,
valuation.
I know. But again, that, just being
Paul,
devil's
right,
advocate
again,
here.
we're not giving you a chance to
No,
speak.
and
This is that
and the
right.
superiority that you mention is only on certain parts. So it's on the scalability or the speed of transactions. Sure, the more centralized you get, the quicker you can process the transactions. Solana's doing that way quicker and cheaper than Bitcoin is. But I think the power lies within the decentralization. That's sort of the stronghold of what Bitcoin is. And you don't see any other token that is more decentralized than Bitcoin right now.
In Rothschild's famous statement, it is, I care not who write the laws, providing I control the money. And that gives me the one statement I repeat repeatedly. They will never let you have your own money. So every time I hear decentralized, essentially what people are saying is, we've dispersed the control of the system away. There's no bad guys that have an ultimate power or an underlay power. And again, I remind everyone, you're in a digital system. It's a railway that's not yours. You don't know what back doors are designed in there. We're finding out all the time that are in there. I cannot trust a digital system implemented by the same people that did CV19, hacking WhatsApp and giving data to everybody. I won't do it. If it's not your rails, if it's not your money, if you can't exchange it for something physical, personally, I will. However, I recognize it's the future and I recognize it's a system. So I'm going to have to participate in both systems, a digital system, because I can't turn this around as a single person. I'm not going to win that argument. And the technology is fast, it's efficient. I'd like to hear your view. Given the others' superiority in other areas, you don't sound like a maximalist on Bitcoin. Where do you stand on the other networks? And do you think they're all equally decentralized, and that is a perfect way of ensuring there's no dark actors or statism that can do various activities or accidents or leaks or various things?
No, there's definitely a scale to which something can be decentralized, and you can look at the decentralization of a system or a coin on different sorts of levels. So who's controlling it, who's owning it, who's able to build it or influence in the future. Whereas I think that on all of those metrics, Bitcoin is the most decentralized. But I'm not a Bitcoin maximalist. I think there's a future in blockchain technology as a whole. I think that it's also wrong to design a token just for the sake of the token and inflating that price and doing some tricks there. But I think that Solana is having its own use case already by having quicker transactions globally, but it's way more centralized than the Bitcoin part. And what you shortly mentioned
What about
is
Charles Hutchinson, who's built up a persona of a lot of authenticity. He's very popular. He's on Cardano. It's technically a rival chain to Solana on a lot of what it does.
that's the marketing message, indeed. But I think it's important to actually build protocols and programs and platforms that people use. I think currently that's a bit lacking in the Cardano ecosystem, but sure, he's still building. He hasn't always followed through on the roadmap that he envisioned in the past, but he's still putting effort into it. And what you shortly mentioned as well is potential backdoors. I'm not saying that there is no chain whatsoever with certain backdoors, but when Bitcoin network is completely open source, how are you able to build backdoors in open source software? It's quite difficult to do. Sure, future threats when you talk about quantum computing, but there's quantum security on the other side as well. And what's going to be the first thing that quantum computing will impact? I think the reason that governments are the biggest investors in quantum computing right now is because it has to do with national security, not just with Bitcoin.
But that tells you who controls it, and governments are tax extractors and are going to be interested in your assets and net worth as well.
I'm not sure. I just think that the impact of quantum computing surpasses the impact of Bitcoin. Sure, we will live in a new age, an era where everything needs to be.
The problem is the big guys have the big guns. That's the story.
I think we'd all agree that the technology is undeniably part of our
powerful
present and our future. There's undeniably momentum on that. The question is the trade versus the use of Bitcoin, because that is the crypto. And again, you go back to the Trump paradox. Russia and China, the B and the R in BRICS, have a hell of a lot more gold than we all are reported by the World Gold Council. He knows that, his staff knows that, Besant knows that. Besant's a gold investor. So he says, we're going to put 100% tariff on the BRICS if they don't come back to the mighty dollar. That's how afraid he is of this direction. So he's terrified of the mighty dollar losing its place And yet he's at the same time creating a stockpile in Bitcoin, which is an anti-dollar technology or story. So what I see is Trump isn't worried at all about Bitcoin being a competitive currency or an anti-fiat. It's a speculation asset for him like it was for El Salvador. Pump it, dump it. In the meantime, his real issue is I'm terrified of the BRICS. I'm going to put tariffs on them. I've got to protect my dollar. I need it weaker, but I got to protect it.
Yeah.
The dollar's never going to go away. It's just going to be repriced. And gold is going to definitely anchor the next CBDC to come out of the frickin' IMF and the World Bank. But again, doesn't mean Bitcoin isn't important. Doesn't mean its technology is invalid. And it doesn't mean its price can't go sky high. So again, I had no problem speculating in the dot-com bubble. I had no faith in the assets I was buying, but I had no problem taking a profit off of it. And I'm just really wondering, and again, I see a lot of clients, I'm not making fun of this, I see a lot of clients come to Zurich with Bitcoin money and convert it to gold because after they've speculated, now they want to preserve. What worries me, and I could be dead wrong, is that a lot of people are going to get scalped in Bitcoin. And I always worry about the middle class because they've been so screwed by our central banks and our Wall Street dragon slayers that I came up with. They're always the plankton to the whales. There are 70% whales behind Bitcoin and 30% plankton, making money some and getting gut punched others. What worries me is if Bitcoin is a pump and dump scheme at a much broader, slower drip level, and that the real victims will be the ones who believed in the narrative, which is sincere. I guess that's my concern. And that doesn't mean gold, by the way, is only that goes up and doesn't have
Can I bring in the avatars of Bitcoin liquidity bid buying?
Yeah.
You can choose between Ron Paul, for example, as an avatar for physical gold and all that it meant economically, or you can have Michael Saylor, Larry Fink. You've got to leave your children to be babysat where they're going. You want someone to choose sound money. All the aspects are ringing alarm bells for me. There's something not right with how Michael Saylor makes these arguments. How many chairs are you sitting on? He's playing Jedi mind tricks for teenagers sometimes in terms of the way he talks. He's got this belligerent arrogance of, well, I'm a billionaire, and he's just doubling down. There's no concept. He debunks portfolio theory because you're only sitting on one chair or using one mic. This certainty, belligerence, arrogance, avatar, and then you have a WEF guy like Larry Fink with all his dropped hints. Or you have a guy, or you have a true avatar. Who is the liberty movement? If it comes down to who is the liberty movement that will allow you to retain your personal wealth and seize for true small government, not some new world order transatlantic all-reaching grid. You can choose between Saylor and Fink, or you can choose the best president that never was, Ron Paul, as an example. And I would go with Ron Paul personally. So I just don't trust. And the problem is, how do they ever truly win trust? There's going to be people like us, and you're going to have to coexist in their system that they're going to bring, because they'll eventually make it you pay your tax on the system to prove you've paid it. So you're going to have to participate in the system. And the key discussion is, how do cynics like me, who are going to try ride two horses here, survive and exist in the crypto realm for what will come, because it will be a digitized system. We'll be paying everything. We'll be swiping or sending an AUP code or doing all the stuff. Wallets are all the thing. And at the same time, maintain a physical digital wealth that is off-grid, that is not controlled, not snooped on by the forces. And I don't know if anyone has any solutions for that. I don't want to take the debate in the wrong directions, but we're going to get Roy's world, like it or leave it. It's coming.
Yeah,
it's coming at you full ball. So we can sit and say why it's not bad and it shouldn't win and try to design the system. No one's listening to our think tank and ideas. They know what they're bringing. You listen to Carstens of BIS. He tells you outright, we can create inflation in a token. You will have a CBDC. All promises, Trump won't do that. Well, they'll wait for the next guy and he'll pivot. You've just pivoted so extremely from the blue to the red in terms of policy. You'll get your next pivot. He's maybe going to do the digital ID, which will be about, no illegal voting, so we can never have a stolen election again. He'll do a lot of the pieces that they'll need. He'll step down, and then the next guy can do the currency. I think Roy's won, actually. We're all the losers in all of this. The technology is going to win out. The control it offers is far too exciting to the psychopathic world that we're living. And we're the dinosaurs, the three of us. with our morality, liberty concepts. This is a new world, and we are an aging generation that are going to say one of the, in the good old days we were. How do we coexist? And I don't know if anyone has the answers for that, but that might not be a pivot our interview host wants to take. But that I think is almost the key.
I think there's a lot of coexistence between technology and blockchain and even hard assets in general and precious metals in particular. There's no doubt that those two can work together. There's no doubt that Bitcoin can go to 1 million or to 0. I don't know. I honestly don't. I'm not trying to be smug. And I don't think we can poo-poo the market cap direction of Bitcoin. For good or bad reasons, it's going to be that way. I do worry about a pump and dump over a longer period. I don't deny that blockchain, the digital ledger technologies, or XRP and Ripple are absolutely the future. Doesn't mean gold is no longer the future either. And there are even ways to tokenize gold just as easily. So I mean, it doesn't mean gold versus Bitcoin or gold is dead and technology's in. They're both going to be important. Bitcoin could be important. It could be replaced. It could be the new oil and then the new oil trade down. It could be the El Salvador bubble we used to pay down debt and then is pushed away and CBDC is brought in as a safer alternative. I don't know. There's all kinds of possibilities. But I do think if I can go buy a car or a house or pay my taxes in Bitcoin, I will absolutely change my view. Whether I love or hate Bitcoin, it is now being used as a means of exchange. Its volatility has been curbed. It is now a store of value and a unit of account. Then it really is money. Right now it isn't. And the argument from Bitcoin is it will be, and that's to be determined. And I have no idea.
Where I differ from Matthew is I don't think it's all going to be about Bitcoin. I think the next level tokens, the better technology, the rails of the CBDCs are not a Bitcoin blockchain. I think
no, it's not going to be on a Bitcoin blockchain. It's not that scalable. If you accept the centralization part, you will go for other solutions to be way quicker with transactions, sure, but that's the centralization risk that you will have.
But do you see a CBDC coming up? I mean, do you see that? Yeah, you do as well. Okay.
Yeah, well, I think that there's.
What effect do you think that will have on Bitcoin or any other?
I actually think that it will have a positive effect on the crypto industry for the reason that we see broader adoption of blockchain technology. I think that these things will coexist, but if people use to pay CBDCs on their cell phone in an app already, makes it way easier to adopt to decentralized tokens as well. So in that regard, I think it will boost the adoption.
Do you see XRP and XLM having, given that they actively courted central bankers from the outset? They never pretended liberty. They were almost more candid and honest. I almost respect them a bit more for saying, we're working with the big guys. Do you see them playing a central role in a lot of the railways that governments might bring in?
I think that the consumer interest currently does not really go towards those super centralized companies. I think that the consumer interest currently still sits in this Solana sort of ecosystem part of things, right? Where you have more community-led initiatives, but sure, XRP, Ripple, they have more power to boost their innovation.
But if it's to be a government's money, surely they should own the rails. And then it's known. We courted them, it's their rails, their system. They'll say, we'll give you a certain level of privacy. Only the IRS can see your stuff. Your neighbor can't check how much you spend. They're going to do this layering of level, and they'll have different rails. And then there's some stuff that might be a lot more open. But that has the power, and I could see that being it. Because at the end of the day, they've got to control the currency. And if government's honest, they're not going to be doing anything where there isn't a centralized control.
Well, then we close on the story we began with yesterday. Again, the historical context of technology, gold, risk assets, governments, human nature, philosophy. But throughout history, when you get a debt crisis, and this is the highest debt crisis in the history of humankind, not just in the US, but globally, we're heading towards 400 trillion. Our GDP is 1/3 of that. So that's undeniable, unvorstellbar. It's unimaginable, the debt crisis we're in. So if you have a debt crisis, we clearly have, we all agree on that. The Bitcoin count certainly agrees on that. Then you have a currency crisis, which is inflation, the debasement of the currency. Of course, social unrest comes because that's an invisible tax, especially on the middle class, the working poor, who've been absolutely sucker punched by their governments for the last generation. And then once you have social unrest, you have centralization from the extreme left or right throughout history. And ironically, crypto, Bitcoin, all of this is a form of really wonderful technological centralization to know exactly where you are, what you spend, and how to get it if we need it from you. I don't like what you just said, Roy. I'm going to take some of your Bitcoin. Whatever. That's the worst case scenario. Again, that's what I see despite the debate of gold. You can take my gold too if I tokenize it, or if you take my gold out of the vault. I'm saying the centralization, the desperation, the El Salvador-like desperation. To me, the Bitcoin strategic reserve in DC is a sign of desperation because we are so in debt. And again, it's not anti-Bitcoin to say that, but this whole conversation is drifted back towards control, centralization, and that is a piece of history. And when the markets, the last good story that we have in the U.S. is our S&P and Dow, when those crash, and everything, and maybe in gold retraces, maybe and Bitcoin retraces, where do you run to? Where's your life raft? And what do you believe in? But the problem is we're going to see, probably sadly, we can all predict more centralization in one form or another.
Yeah, and you'll have to reinflate the system. And that's where, again, I said, I don't think you'll leave doors open just to run around the system. They need to get money into the system again. And if there's a possibility in an inflationary environment to stay out of that, stay out of the dollar, stay out of whatever currency they can come and put up, well, they were going to close that door. And that's why I think is the biggest risk to this, actually. I think there is the market turmoil that we can see, the decline, the deflation, the stagflation that we potentially could see can become a very big headwind for Bitcoin in as I see it. But I also just have to look at the charts, and I still think also if just in a shorter time frame here, Bitcoin is going to outperform gold.
Yeah, I totally agree.
Yeah, and we are big advocates of also diversifying portfolios. So we would share education with investors to not go all into one asset, not even within the crypto asset classes. But we are highly encouraging people to invest in other industries and asset classes as well. I don't think there's any concern with that.
You appear to quite like Solana. What do you make of the fact that it's very VC backed, which is kind of banker VC?
Sorry, I'm going to cut the direction here because we actually are out of time. We have our next activity coming in now. So unfortunately, this was, a great discussion. We've covered a lot of things. I hope this was also valuable to the viewers. But I think with all the information that we shared today, it's pretty clear that I think Bitcoin, blockchain, gold has a role to play, and that those people that also want to invest in them should always do their homework, always do their due diligence, but it has a role. So maybe concluding thoughts for very short, every one of you.
Yeah, it's like Ray Dalio. I own gold, but I put a little Bitcoin on top. That doesn't mean those are the only two assets he owns. And again, you have to not de-worsify, but diversify. The biggest risks I've seen in any asset class is concentration risk, too much eggs in one basket, timing risk, no one can do it, and leverage. Whatever that is, whatever your asset class, be careful of that. And always look at both sides of anything you have the highest conviction on, whether it's politics, markets, or asset classes. That includes gold. I look at it both sides as much as I can. I'm clearly biased, but I have to look at both sides. I have to look at the risks in that. Same with stocks and bonds. Same with tech versus large cap versus treasury bonds versus munis. Do the same with crypto. Do the same. Don't be religious or ideological about anything. Be informed, be skeptical, and then make your decision. And by the way, nothing wrong with speculation. I wouldn't be here today if I didn't speculate in Dotcom stocks. And I wish I had bought Bitcoin at 1,000 and had the guts to stay in it, but I didn't. So again, it's not gold is better than Bitcoin, you're stupid, I'm smart. I think that's a not helpful debate at all.
Henrik?
I want to echo the
short and juicy.
Not being religious on things. Yeah, sure, I'll try to. Not being religious on it, and not just marrying it into Bitcoin is going to be the Jesus or whatever we're trying to put it to. I think it has maybe paved the way for what is going to come. I think there is a technology. I know there is a technology there that is going to pave the way for large efficiencies and benefits coming in the financial sector in how we interact. And I think that is what people should be focusing on in the future. But whether it's going to be Bitcoin or it's going to be something else. And then it's completely different from how I trade things, because I could definitely see Bitcoin outperforming gold over the next coming months here. So, but in a long-term perspective, I probably say it's the technology that is important, and whether it's called Bitcoin or something else, I'm probably a little more agnostic on that.
Yeah,
Roy?
I'm just happy with this crowd that we are able to find the sort of consensus that blockchain technology will have as a technology itself, a place in the future. How everyone then capitalize on that opportunity or technology can have different strategies there. I think it's important to diversify as well and not go 100% into one specific part of your opportunities. But yeah, it's good to see that indeed blockchain technology is here to stay, most likely, and that we can, figure out our own strategies on how to capitalize on that.
Francis?
The crisis is one of a reserve asset. You should have a physical reserve asset, not the most outperforming one, the one that has an inherent degree of stability for securing your primary wealth. For that, I will have physical gold. However, I recognize, and lowest bar that I set is that essentially all digital money will be in some way captured. That doesn't mean I'm going to be 100% accurate, but at some level, via contagion, leaks, various other mechanisms. So I treat it as such. So I treat it with inherent distrust, but I recognize that it's the future and that's going to be brought on us. I think Bitcoin maximalism is a major mistake. I think the first version of anything is never the best version. And actually, I'm looking at those that intentionally set out to be part of the Rails system by design of their remit as potential outperformers, and I will participate in them for the upside as an alpha to upside in those particular projects. I will not say we mentioned blockchain, but I'll also point out that there's Hashgraph and other technologies that may also even be even faster. So this is a very rapidly developing and dynamic space. So definitely don't be in a belief system about any one thing. Be ready to learn and watch the technological developments and pick a few horses for this race.
Thank you. I thank every one of you. Thanks for your time. Thanks for the amazing knowledge. To the viewers and the listeners, thanks for watching this. You, as I mentioned at the beginning of the episode, have the chance to win 1 gram of gold worth about 90 euros or 70 pounds or $80, you name it, by commenting GOLD, G-O-L-D, in the comment section. You have to, that's the only condition. You need an account at GoldRepublic and OKX. Thanks for watching, and I'll see you in the next episode of the Macroscopic Podcast.